I may seem like a pretty smart cookie when it comes to finance, but boy do I bungle sometimes. I frequently sing the praises of set it and forget it investing on this channel, but I've gotta be honest. Sometimes I read the news, and I adjust my investment portfolio based on it. There's a picture I want to show all of you right now, and I want you to take a second to reflect on it. See, the guy on the left knows nothing about investing, but he still dumps money in an index fund every now and then. The guy in the middle thinks he knows a little more about investing, thinks he's smart, and buys and sells based on the news. Finally, the guy on the right actually knows about investing, and he understands that he should keep his hands off his portfolio. Most of the time. Well, what do I mean by most of the time? Now, I know it may seem pretty crazy to just invest money into an index fund and not be alert to any big news that can affect the trading price. I mean, all your money is in there. Shouldn't you want to sell at the sign of bad news to save yourself from potential losses, and buy at the sign of there's good news to capitalize on gains? Or let's flip it. Maybe you want to buy after some bad news when the price is low, predicting that it'll climb back up. Or maybe the news has been too good recently and you want to sell preemptively thinking that there'll soon be a crash. Let's see what Matthew McConaughey has to say about this.
Number one rule of Wall Street: nobody knows if a stock is going to go up, down, sideways, or in fucking circles.
You know, he's actually right. You never can predict with certainty about how the price of an asset will move, up, down, or in circles. So we now understand that even if you believe that a stock can move a certain way, there's never a certainty that you're right. See, I own an ETF called VDY. It's a pretty common Canadian ETF that encapsulates some big companies in Canada. A little while ago, TD Bank got into some hot water because some of their accounts are being used for money laundering or something, and they pleaded guilty to it. They were the headline news, and got slapped with a bunch of penalties. I read this news, and I looked at my holdings in my VDY ETF. Uh-oh. 10% of VDY is TD stock? So I automatically assumed that TD would tank the next day, so I put in an order to sell all of my VDY as soon as I could. And the next day rolls around, and guess what happens? It nuked! TD lost around 8% of its value just that one day. So thank God I pulled out of VDY. I just saved myself from a huge loss. What? VDY was up around 1% that day. What happened? Well, I pulled everything out of VDY since TD was around 10% of the fund. But the other bank stocks in VDY were worth around 30% of the fund. When TD tanked, the other big bank stocks soared. See, the big five Canadian banks are essentially an oligopoly, so when one of these competitors gets struck down with money laundering charges and their stock drops, of course the other big four banks will soar. They just lost a huge competitor. So by selling, I shot myself in the foot. You know, here's a fun fact. If you just stayed invested the whole time and didn't miss any trading days at all, your current returns would be at 100% of potential. However, if you missed just the best 10 trading days in the stock market, your current gains would be reduced by around 50%. Crazy, I know. And the tough part is that almost all of these big days happen right around times when the market just crashed. So it's becoming pretty clear that trying to fiddle with your portfolio based on the news is historically a pretty bad decision. Or is it? Well, most of the time, yes, absolutely. However, there are some situations where it might make a little sense to be a little more active in your portfolio management. Here's another personal example. Around a month before April 2025, Donald Trump announced sweeping global tariffs. He actually did the same thing twice in prior months, and each time he put them into effect, the stock market sharply dropped, and a few days later he announced a delay to the tariffs for around a month, which spiked the market back up. I had a high degree of certainty that April 1st, 2025 tariffs would follow a similar trend. A week before April 1st, I sold everything I had in the stock market and held it in cash. Sure enough, April 1st hit, and I witnessed the markets plummet around 6% as I was sitting in my 9:30 accounting class. As the day went on, the markets sunk lower and lower, and I was feeling so incredibly happy. As soon as I got home, I rushed onto my computer and reinvested everything that same day. I finished the trading day down only around 0.5%, where most were down upwards of 8%. The next day, the markets were down again, 5%-ish. And then the next day down a little less, and then a little less. Now, during these days, I watched thousands of dollars vanish from my portfolio, but I wasn't stressed. I mean, history was on my side. Markets will always recover eventually. Not even 1 week later, Trump announced another pause on the tariffs, and the markets recovered just as much as they lost, and then some. I'm now up around 14% in my portfolio this year, and I owe a good 7% of those gains to my quick portfolio liquidation I made before April 1st. But imagine what would happen if I held off on reinvesting for a couple more days. I would have missed that huge market recovery. So what's the takeaway of this video? Honestly, it's kind of hard to say. History says keep your portfolio on autopilot and ignore the noise, but without my small bit of active portfolio management this year, my gains would have been cut in half. So here's what I'll say to all of you. It's risky to touch your portfolio, but I suppose it's okay to do so if you're extremely confident with what you're doing is the right move, and you understand the risk. Your situation can end up like my VDY situation, where I sold all of it and lost big, or like my tariff situation, where I sold all of it and won big. So I'll let you take your own conclusion from that. Or not, I don't really know. What am I, your mom?